Good afternoon, Scott Redler, T3 Live. Welcome to today's recap, today's Wednesday recap. So, we entered this week in corrective mode. Big move, 1687 all the way down to 1560. What was that, almost 6-7%? Then we tried to figure out, would we have some end of the quarter performance marking? Would we have a little markups into, the end of June, the end of the second quarter? So what happened? We saw a doji style candle, and I tried to make fun in the Twitter sphere. I'm like, all right, will doji style lead to some nice performance? And what do you have here? With the spiders, you take a look at the doji, go to the chart. That is a doji right there. Doing it doji style. That's what technicians like to do sometimes. And what happened, what does that mean? It means first you had your outside day, May 22nd. Then you had your little failure there at the trend line. And then here into what was a micro spot. We didn't quite get down to all the way to 154. You had a middle of the ground candle showing you some kind of exhaustion to the downside. So the key was to perhaps be a little long into this doji style candle, because it does yield to some performance, and then buy above the 158.43, the prior high, or even when it reclaimed the 100-day. You had a little close above, and then today you had a little bit of a follow-through. Where did we go? We went to one objective. 160.25 was that first pivot low, the first time we came in and tested the 50-day moving average. Okay, so that was objective pretty much number one. Okay, so for me, this morning I had a very inactive day. I came in with 5 longs. I think by almost 10 to 10, I was out of all of them. Tried a few little tactical things. Nothing really, worked that much, and then I had to take care of some stuff, so I did not trade. So on the close, people are like, Red Dog, what are you doing? Are you getting short? Are you going to position in for what could be a little bit more follow-through up to this prior pivot, which is 160.130, or perhaps a move to retest this 50-day? And I'm like, you know what? From where we were down at 155.73 up to the 160 close, you know what? That to me was it wasn't easy, but the easier type bounce play. From here, I'm not that sure. I think if I got short, would I be able to stay short up until, the 50-day, or maybe even a push into this gap? No, I wouldn't. So for me, I'd rather not start now. But to play long, for after this meaty 2-day move, I'd rather do it tactically after an open. I don't need to be involved. I don't need to have to worry about it tonight. I personally am not sure whether or not this is the low of the summer. Maybe we get a push up, maybe we get a higher low or something, and then it becomes more conclusive. But as of right now, you had your nice window dressing move that could go a little bit higher. So right now it's, more tactical. So with that said, we talked about what potentially could bounce, where are the strong stocks, what do they want to potentially mark up, where could the action be. Tesla today was one of them. Didn't have the power that it usually has, but it did trade above 104.20, closed well, above the 21-day. There's the high. This is a general leader of the market. Amazon also, we've talked about it many times. It did come in and hold the middle or upper end of this overall channel. This is where the bottom was, this is where the top was, held above the moving averages, still looks good. This is still showing leadership. LinkedIn also, another stock strong, showing leadership, coming back to this downtrend. Remember, we talked about what will it do at this little area, and it traded through. This was your Red Dog reversal, so if you got long at 169.17, you never even had to sell it. Nice 3-day move, 10 points versus the Red Dog reversal into resistance. This still acts well. Will it break through this trend line before earnings? I don't know, but overall, it's in the game. Google was upgraded, pretty lethargic, held, I guess, where it had to. If it was an upgrade, who knows what would have happened today. Maybe tomorrow we'll look at this little pivot, see if there's any kind of action area above, 880-ish. Above 880, it could pop up. It still is above the 50-day. It's just not really showing the power. Maybe it's too high priced, or who knows. But all in all, still kind of in the game. Yahoo gave us some follow-through. I did go home long it yesterday. I played it a little bit intraday, went home long. Nice move back to resistance. Now this will need some time. You saw also, weakness out there. Guys are still making money shorting Apple. Apple still looks relatively weak. Apple, ever since breaking this ascending channel right here, has done nothing but dripple to the downside, if dripple is a word. Okay, that was 444. That was probably the last time I really focused on it, besides the day the developers conference happened where it reversed and showed no signs of life, and then below 428.50 was just another continuation to the downside. Today, it tried to break below this 398, but I guess the market was too strong. It's now not even a stone throw, but a pebble throw away from the 385 low. Still not acting well. This potential inverse head and shoulders got negated right there. You haven't heard me say that word since. It was worth a try. It got rejected by the downtrend, just like it got rejected many times over the course of this breakdown. Anyway, still doesn't look good, still not worth your time. I know it's hard to get away from something that did provide so much opportunity so many times during the over the course of the past few years, but try. I've been not talking about it. It's been way down the list until I see something change. Yes, could you make money short it? But typically my strengths are to be buying things when they're going up, trading for momentum in upward bias. For me to be shorting Apple on a day when the market's bouncing, it just doesn't pay to my strength, so I didn't do it. As far as the metals, no real bounce. Looked at it to see if there was some type of opportunity there. I think I traded it once, but it had no power. This was your gap down. This was a support area mapped out, so maybe we get there in a few sessions where there could be some type of bounce trade, but ultimately this is really broken, guys. 161, 149.5, 130.5, 123. Now look where it is. The signs have all been there. I don't care what the gold bugs say. They're opinionated, they have conviction, and they have not any market confirmation with it. And that's how you lose money. That's how you go out of business, by having opinions and not letting the market confirm it before you execute on it. Looks gross. Silver also, not quite at that 17.5 level, but from the top here to the downtrend to the broken support, coming into some really big support. You go to your weekly chart. That's what we're coming back into. So we'll see. As of today, no bounce. Okay, let's go back to the monthly so you can see it. But it's coming into that zone. Maybe we get some type of red dog reversal for a trade, but I would just trade a level versus level until that happens, or we get some kind of red dog reversal. And today, it looked like it could have went. I'll show you the quick 5-minute chart when I tried it. Tried it, I think, right here, okay? Gap down, tried a little bit right in this little zone here. Okay, actually, no, it's not. That wasn't it. Sorry. Let's go to East Coast so you don't see where the gap is. East Coast, right here. This was when one time I had my intention on it, okay? Had a nice, potent move, right? Looked like, it woke up. Held sideways, making you think perhaps it goes to fill the gap. What happened? Went to the downside, inside and down, according to Robin the Black. That got me out of it, and I didn't look at it again the rest of the day. Wasn't worth your time. Same thing happened with GLD. GLD gave you, it wasn't even as potent, okay? It triggered, it went lower, small little 5-minute bar, was hovering at resistance. I was long a little bit, failed, sold it, didn't look at it again. Tomorrow's another day. Now's the time to look a little bit, but not be enamored with it, because it could continually go lower. You don't know, but it is oversold. The RSI reading is crazy to the downside. So maybe there's opportunity for guys like us who are not trapped, who don't have opinions, that could technically find some type of oversold bounce if it shows its face. If it doesn't, let it run its course. Financials went negative a little early. You go to the daily chart of Goldman. Not really good looking here. This was one of the reasons why probably people lost money short today. They're like, oh, look at the financials, all negative, but the rest of the market held up. I personally sold mine at the open. I always sell some pre-market, and then when it went negative, I'm like, I'm done with it. Did the same thing with my JP Morgan, which came into my resistance area. We talked about this, retest here. Okay, resistance. Here's your 3-day trade. For me, lots of times for a snapback, I don't go past 3 days. If there's a 4th and a 5th, I sometimes cry and complain, but not part of my process. As far as, 2 days ago, I talked about Walmart real quick. Came into a point that I thought was buyable. I personally did not buy it, but if you did, nice little move, right? Nice little 3-day move. There's your snapback, and now it's coming into a downtrend. We'll see how it handles that in the next few days. TBT, wow, still strong, flagging up here. Get rid of this little resistance, which now is not out of the way. Here is your break above this 69.50.70, bull flag, above this 76. It continues. It's still waiting for the 8-day to catch up. So with all that said, there's been a lot of nice maneuvers here. Okay, a lot of people in the community coming out with some really good ideas. Last week, Big Ben spoke, taper talk, Market failed at 1640. From there, you had a really nice short. You could have picked and choose, you could have figured out where you wanted to play it from 1640 down to 1560. What is that, 80 handles? You didn't have to be there for all 80. You could have been there for some. Then from that 1560, we bounced back, doji style. From there, went above the 100-day. You could have positioned long, sold into some strength today or yesterday, which again could have been another 20, 25 handles pretty calculated to the upside. So all in all, at least as range trading, not like the grind, not like the overextended market we had in late April into May that was difficult. First few months to me were easier because we followed the 8-day, we followed the 21-day, we weren't extended, we weren't out of whack. And once we became a little extended and out of whack, that's when I got a little disgruntled and I had a hard time holding my portfolio approach. But now we're back in tactical. There are ranges, there's relative strength, there's relative weakness, there's lots to do. And even though it's a summer, there is action. So with that said, hopefully you performed pretty well. We're almost done with the quarter, almost done with June, second quarter and the whole half a year behind us. I'll get into that a little bit later tomorrow. Have a good night. I'll see you in the morning call with Brittany. Have a great one.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.